Hey guys, today let's talk about a very popular topic which is international investing. I get asked a lot about how to start investing in the international markets, what's the best route. So I thought first let's quickly understand why you need to invest in the global markets. Now with the rupee falling to record lows, you have no choice but to invest in global markets if you haven't already. And investing in markets like the US helps you hedge against the falling rupee. So global investing is not just about accessing global businesses, it's also about holding assets in stronger currencies. Over time, currency itself becomes a very meaningful contributor to overall returns in your portfolio. So as an investor, you always need to reduce your concentration risk, your country risk, and you can do that by diversifying your portfolio into global investments. Remember, India accounts for just 4% of global market capitalization and GDP, which means that for a well-balanced portfolio, you need to invest outside of India. There are also large global themes that you can be a part of where India is not present in a very big way, whether it's AI, deep tech, robotics, semiconductors, and all of this you can invest in by investing in the international markets. Also, global equity investing is no longer that complicated. Indian investors can participate through various routes, whether it's international mutual funds, India-listed global ETFs, direct overseas investing under the RBI's liberalized remittance scheme, through foreign brokers, or global access providers through GIFT City. So let's begin. Where do you invest and how do you invest? Let's break it down for you one by one. Now, the easiest way to invest is through platforms that help you invest in low-cost index funds in the US. Basically, a basket of companies that invest in the largest companies in the United States. So here I'm using the Tickertape platform because they are one of the first platforms that allows investors to invest through GIFT City, which is the most compliant and regulated way of investing in global equities for Indian citizens. So today we'll talk about 5 popular index funds that you can look at. The Vanguard S&P 500 ETF, the VanEck Semiconductor ETF, the Invesco QQQ Trust, the Global Uranium ETF, and the Global Robotics and Artificial Intelligence ETF. Now, one of the most popular index funds is the Vanguard S&P 500 ETF. What it does is simply tracks the performance of the S&P 500 index that is dominated by the stocks of the large US companies. So if you look at the returns, the 3-year returns of the Vanguard S&P 500 ETF have been very strong. All you have to do is go onto the Vanguard website and you will see that the earnings growth rate of these 500 stocks in the Vanguard ETF is 23.4% over the past 5 years. And the major holdings typically include large tech companies like Apple, Microsoft, Amazon, Alphabet, Nvidia, and Meta. The size and scale of these companies is immense. So you are effectively investing in some of the largest companies in the world. Nvidia, for example, forms 7.3% of this fund. If you look at the market cap of Nvidia, it is $4.4 trillion today, making it the world's most valuable company. Now, another very popular ETF is the VanEck Semiconductor ETF. It has some of the largest semiconductor companies in the world. 17% of this portfolio is Nvidia, followed by Taiwan Semiconductor, Broadcom, Micron Tech, ASML Holdings. All of these are large semiconductor companies globally. Now, the 3-year performance of this fund has been very strong as well. There are 25 stocks in this ETF with an earnings growth rate of 21.9% in the last 5 years. But why semiconductors, you ask? If you look at the recent report by Deloitte, the global semiconductor industry is expected to reach $975 billion in annual sales in 2026. It is one of the fastest growing sectors globally, and as an investor, you must have exposure to it. Let's move on to another very popular fund, the Invesco QQQ Trust. It has a great track record. It is an ETF that tracks the Nasdaq 100 index. Now, the Nasdaq 100 ETF has beaten the S&P 500 7 out of the last 10 years as of June 2025. If you look at the 5-year cumulative return for the Invesco QQQ, it's been a staggering 86.7%, meaning that $10,000 invested in Invesco QQQ 5 years ago would be worth $18,674 today. So what does this fund have? Now, 63% of this fund is exposed to technology stocks: Amazon, Tesla, Apple, Microsoft, Palantir. If you want to look at high growth areas and sectors of the future, one ETF that you can consider is the Global X Uranium ETF. Now, uranium will likely play a key role in the global energy transition. Forecasts suggest that reactor demand could rise from an estimated 65,650 metric tons in 2023 to nearly 130,000 in 2040. Nuclear energy, as we know, is a dependable and clean power source which emits zero direct emissions. It's capable of generating a maximum power output nearly 92% of the times. Some of the top holdings of this fund is Cameco Corp, NextGen Energy, Uranium Energy Corp, Oklo Inc. Now, Cameco, as an example, is one of the world's largest providers of uranium needed to generate clean, reliable baseload electricity around the globe. It's vital for low-carbon nuclear power generation. As of 2026, Cameco operates at the center of a surging uranium market focused on supplying fuel for clean air energy needs. Now, since we are talking about sectors of the future, you should also check out the Global X Robotics and Artificial Intelligence ETF. Now, this is a very interesting one because this ETF invests in companies that stand to benefit from increased adoption and utilization of robotics and AI, including those that are involved with industrial robotics and automation, non-industrial robotics, as well as autonomous vehicles. And as we know, these are the sectors of the future. Now, the global robotics market was valued at an estimated $108 billion in 2025, with forecasts suggesting that it could nearly quadruple to $416 billion by 2035. Robotics and AI have wide-reaching application, extending far beyond industrial activity. The BOTZ invests accordingly with global exposure across multiple sectors and industries. Now, the top holdings in this fund are names like ABB, Nvidia, Keyence, Fanuc Corp, Intuitive Surgical Inc. Keyence, for example, is a Japanese company that leads in manufacturing of factory automation equipment. And just to give you a sense of the size and scale, Keyence Corp has a $91 billion market cap. So as you can see, by investing in international companies, you're not only diversifying your portfolio, hedging against the falling rupee, but also participating in the massive growth story of these sectors of the future. Now, something that you need to be very cognizant about is regulatory trust. Your investment account, your US investment account on Tickertape is fully compliant with the IFSCA Global Access Provider Framework under GIFT City. It's easy to set up and track compared to traditional overseas accounts. US accounts can be created within 10 minutes and users can start investing in global stocks. It's very important also as an investor to look at portfolio consolidation. Now, one thing I really like is that I can track my US investments alongside my Indian stocks and mutual funds, everything in one place. So if you already have a domestic portfolio, you don't need a separate app to manage your international holdings. You can link, whether it's your PAN card, you can link your Aadhaar card and get access to all your mutual funds and connect your existing broker account like Zerodha, Kite, Angel, etc. Track all your investments under one roof. Thank you so much for watching this video. Any questions, let me know in the comment section.